Hello traders, welcome on a daily analytical report with Alpari. My name is Tomasz Wiśniewski and I'm a chief analyst in Alpari Research and Analysis. So we start not very interesting week because it will be a bit shorter week because on Friday many traders will have day offs, many stock exchanges will be closed due to the Easter holidays, due to the Easter. So that is why we don't have many significant data being published this week. Macro calendar is rather empty. We probably gonna still digest non-farm payrolls on Friday, but I'm gonna tell you about that in a second. And I think that the biggest news will be geopolitical tensions with North Korea, but I don't think that many traders treat North Korea seriously. But we have some significant changes in the situation there. For example, China deployed 100,000 soldiers to the border with North Korea. Also, U.S. is sending ships over there. North Korea is was always hostile towards U.S. So we won't say that they changed the tone, but they seem a little bit more aggressive lately. Apart from that, we still will focus around Syria, about tensions between US and Russia because of this chemical attack in Syria. Well, we still have to wait for researches about this chemical attack because it's not so sure that it was actually how it is said in mainstream media. But this is not very influential on stocks, but when the calendar is empty, traders are looking for other information to be a main driver for the price, so they may look at the geopolitical side. Let me show you the calendar for this week. As you can see, on Tuesday we don't have any tier 1 data, we don't have any data labeled with 3 red exclamation marks. We do have on Wednesday data from UK and from Canada. On Thursday, what do we have here as data from the job market from Australia, pack of data about trade balance in China, and on Friday, pack of data from United States. So from Eurozone, actually, you can see that we don't have anything significant. I told you that we're going to speak about non-farm payrolls. Well, the first initial reaction from non-farm payrolls was bullish on euro-dollar, because the number came worse than expected, so it was a reaction triggered by algos. They saw a worse number and they sold US dollar. But after that, traders, that was an emotional algo-driven reaction. But after that, when traders look at that number and they explained that it was mainly caused by snowfalls in March, they started to buy American dollar, and American dollar came stronger. So we will start our technical analysis looking at euro dollar first. What has changed? As you can see, Monday, Tuesday, Wednesday, Thursday, that was a very boring side trend ahead of the FOMC, and this is the FOMC reaction on a bit shorter term. This is the support, this is the FOMC reaction here. That was local support, that was a bit longer term support here. The price bounced from this midterm support, went up, went above the short-term support, but then this reaction faded and price went significantly lower. And what we received was a movement to the lower line of the wedge formation. What is that wedge? Well, for a long time we are seeing here an inverse head and shoulder formation, left shoulder, head and right shoulder. Here with this red color we have a neckline, and with this blue color we do have a breakout above the neckline here, right? And this can be considered as a false breakout. False breakout which bounced from the upper line of the wedge formation, right? So we have two bearish factors here. First, a bounce from the upper line of the wedge, and then come back below the neckline. Two bearish factors coming together. So huge downswing here, and instead of the inverse head and shoulder formation, what we get here is a wedge and a test of the lower line of the wedge. Wedge is a trend continuation pattern. Trend here is bearish. We can see consecutive lower lows and lower highs and lower lows. So what's the closest scenario here is a short-term uptrend, short-term bounce, and a long-term downtrend, right? That would be perfect if the price went, for example, here and then here. That would be absolutely amazing, very technical movement. But for that, we need to wait a little bit. So far, so good, right? Yesterday we got contact, we got bullish reaction, price advanced higher. I don't know if this upswing will be this big, or will finish actually now. But in general, what we're expecting is a short-term upswing, which is happening right now. But in the longer term, we are anticipating a downswing. That's our view on euro dollar. Let's look at Australian dollar to American dollar. What we are having here is a a long-term sideways trend, but in the shorter term we have an uptrend, downtrend, uptrend, and now we're having a correction of an uptrend, right? So we didn't manage to break the horizontal resistance here, so we are testing support. Support was important in October, it was a resistance in December. After breakout, it was a support at the end of January. It was a support at the beginning of March. And we got a breakout on Friday. But as you can see, this breakout can be a false breakout. Why is that? Because the price is not going lower. But actually what we're having here is a price is trying to come back above this level. Obviously, it may be testing, the price may be just testing recent support as a resistance, but this situation looks more bullish in my opinion. It looks like they will try to come back above this level, but obviously we'll have to wait. For the sellers, if you believe that the price will continue to go down, this is a good occasion to go short, because the price is testing now recent support as a resistance. So it's a perfect occasion to do that. But I do not believe in a further downswings here. I do believe, I'm thinking that we can see a false breakout here, and actually from this point the price can advance higher. Australian dollar is also very strong on a pair with New Zealand dollar. You know this instrument, we're showing that for a long time. Let me remind you, from the long term, what we're having here is a downtrend, and we finally broke the upper line of this downtrend, and we transferred that into a support, right? It was a resistance, now it's a support. The price also created an inverse head and shoulder formation, left shoulder, head and a right shoulder, and we broke the horizontal neckline. It's pretty clear, this neckline here. We broke this neckline, the price went higher, and now we are testing this as the closest support. This resistance we are testing now as the closest support. What we are having here on Friday is a hammer candlestick, right? This hammer candlestick has a long tail and a small body on top. When I saw this candle on Friday, I was thinking like, oh my god, it's perfect trading opportunity. We are having a hammer candlestick on a trend line and on a neckline on two important supports, which is a perfect signal for opening long position, right? But after that, as you can see, maybe let me show you hourly charts, because you have this is this Friday, but on Monday the price, instead of going up, went down. We didn't make new lows, but that was a dangerous situation that we're pushing for new lows here. We're pushing this support. But as you can see, we got a defense on Friday. We also got a defense on actually Monday, Tuesday, and now the price is advancing higher. Well, it depends. We can have this line here, or we can have this line lower. But what is important is that we're defending the neckline. We're defending the long-term downtrend line, so that can be seen now as a very strong support, which creates a good trading opportunity for with a good risk to reward ratio. Well, still, if we look on a daily chart, stop loss, for example, here for 50 pips and a potential target for 200 pips, makes the potential profit 4 times bigger than a potential loss, which is always a good trading opportunity. Also, what I think that there is a correction quality pattern. I need to check that. Well, there is not. This correction is a bit smaller. Even if I'm gonna adjust it to the good place. Here, yes, this correction is a bit smaller. This one was 220 pips, and this one is 200. So 20 pips less, which is not a big difference, 10%. So more or less those corrections are the same, not equal, not exactly the same, but more or less. But anyway, market looks like it's ready for an upswing here. American dollar to Swiss franc. Here is a very interesting situation. Why is that? It's more or less a sideways trend, but also it's a ascending triangle. Right? The price is making higher lows, but it's not making higher highs because we have a horizontal resistance here. And the recent price swings created a flag, this blue lines. This is a flag in an uptrend because it was created after an upswing flag, and it should result with an upswing. Why is that? Because traders managed to break the horizontal support here, but they failed 2 times, 1 and 2, right? They failed 2 times. Also, for the second time when they were doing that, they created a bullish engulfing, which is a very strong bullish pattern. Bullish engulfing, it's also an outside bar at the same time, because here I have bullish engulfing, for example, with bodies, but it's not an outside bar because the lower tail of the second candlestick is not so long. So what we're having here is a defense of the horizontal support with a double bottom and a bullish engulfing. We also have a flag, which is trend continuation pattern, and trend is bullish, I'm sorry. But for a proper buy signal, what we need is a breakout of the upper line of the flag. So far, we do not have this breakout, so we have to wait. Like that. Alright, so we have to wait for breakout of this line. And once it is going to happen, we will be able to talk about buy signal. Something from my local market is American dollar to Polish zloty. What we're having here is an uptrend. The price beautifully bounced from this uptrend line. They didn't manage to pull further the same correction because those are the same, 4,500 pips. Here I think they made 3,800, yes, pips, and they created a hammer on a trend line, and now we have 2 weeks that they follow that. The price is also creating a flag here. So what we can have here is either a breakout of the flag now or a bounce from the upper line of the flag, and they will try to make the Fed the same wave, bounce from it, and then make an upswing. That would be absolutely beautiful. That would be a very technical movement. I would have everything. Correction, third correction quality pattern. We would still have a flag and an uptrend. It would be absolutely amazing if we would see this kind of movement. British pound to American dollar. Still locked in a symmetric triangle. If you're a trader on the pound, I feel sorry for you because we do have a boring sideways trend. What some traders may see here is a trend continuation pattern, more or less a wedge in an uptrend below the upper line of the symmetric triangle formation. So many traders are expecting a breakout here, which will lead us to this resistance, and from this point maybe breakout or a bounce. Still too early to say what's gonna happen. So on cable wait and see approach. I told you last week or 2 weeks ago that for me there are slightly bigger chances for an upswing here. And I still think it's on the table. British pound to Canadian dollar. That's a long-term situation. It's a weekly chart where at the beginning of the year we spotted this bullish engulfing formation, and now we broke. A few weeks ago, we broke the resistance, and from that point the price escaped from this boring sideways trend. Now we're having a correction again, but at the end of the day, I think we should end up with an upswing here with touching this resistance. I think that's what should happen. And gold. With this uncertainty on the regarding geopolitics, gold is gaining strength. We had a bit of a dangerous situation last week because the price created a false breakout pattern. As you can see here, it was a false breakout of this resistance, this horizontal resistance on $1,260 per ounce. They couldn't hold that. It was also the effect of the non-farm payrolls, right? We can see this upswing, but then American dollar got stronger and this affected gold. What we're having here is not a flag. This is a channel up formation. It's not a flag because it's those lines are not in the direction opposite to the trend, but they go with the trend, so it's a channel up formation. And most probably we'll try with this resistance for the fourth time. 1, 2, 3, fourth, and maybe for the second time, because that was the first time. For the second time it will be successful. It will be successful. This movement have chances to be sustainable, to be promising, and this we can be led to this long-term resistance here. Daily chart does not look good. As you can see, this shooting star candlestick is very bad. In theory, is very bad for sellers, but as you can see from the technical point of view, traders now are ignoring that. They are ignoring that signal. I think that the sell signal will be created once we will break the lower line of this channel up formation. I wouldn't even wait for this horizontal support. I would just wait for the breakout of the lower line of this channel up formation for the midterm sell signal, because you know that in the long term we are positive on this instrument. Euro to Japanese yen. That looked like a very important breakout because we broke the lower line of the flag formation, and it's a legitimate flag because it's a downtrend flag, and we should see another bearish wave. We also broke a horizontal midterm horizontal support here, and actually for some time the price was going down nicely, 50 pips. But now we're having a pullback. It's probably a similar situation as with Australian dollar to American dollar. As long as the price didn't come back above the support, everything looks normal, right? Well, maybe not looks, because it looks suspicious, but on the paper everything is normal because the price is testing recent support as a current resistance. But for me, this upswing is too sharp, and it's more like a V-shaped retracement. Also, the same thing is happening on Australian dollar to American dollar, so it's a bit too aggressive, those movements. Those retracements are a bit too aggressive, which creates a chance for a false breakout here, for a false bearish breakout. If so, if that will happen, once we'll be able to break that cross here, so the midterm downtrend line and the long-term lower line of the flag formation, once we will be able to come back above those two lines, that will be a definite buy signal, and negative sentiment will be denied. Euro to Australian dollar. We are still struggling on this horizontal resistance. That was our scenario. But as you can see, we're having more of a sideways trend here. I would say something like that, a pennant which happened after an upswing. So we should see an upswing here as well. So the bearish scenario is off the table. I think that the price is trying to come back heavily. Euro to British pound, also as cable, so as British pound to American dollar. Euro with British pound is in a sideways trend. What we're having here is a symmetric triangle formation. It does not matter if you use this line or this line now. Okay, let's be safe and use this line. So we're just in a symmetric triangle formation, and we should just wait for a breakout here, either the upper line or the lower line. It is a potentially very good trading opportunity for the long-term traders. Not for now, because we are exactly in the middle of the sideways trend. It's never a good place to buy. Where professional traders buy or sell are supports or resistances, not in the middle between. That's not a good place for trading. New Zealand dollar to American dollar is defending a lower line of the flag formation. What flag? This flag. This is a flag or a wedge. It doesn't matter. What matters is that we defended the lower line of this formation with quite a good looking candle, but again, global demand for American dollar is pushing the price lower here. Maybe let me change the color of the flag. Can be confusing with those trend lines on the bottom. Right? That is a flag. As long as we stay above those lines, the sentiment is positive, kind of positive. Once we will be able to break this horizontal support, the sentiment will be negative. British pound to Canadian dollar. Let me remove that because we had that recently. And now let me change the accounts. I will show you oil and stocks. Oil, the news for the oil is a bit of disruptions on one of the biggest fields in Libya, which means the lower supply, which should push the price higher. But to be honest with you, I don't think that this information can be so influential. I think that Many of this upswing is because of the stop loss activations of the sellers. Stop loss for the short position is a long position. So once they knew that it's gonna fail, here their stop loss orders here were activated, and the price is advancing higher. What we're having here, we're very close to the dynamic resistance created by connecting recent lower highs, and most probably we'll test this line anytime soon. It looks positive for the oil price, and in general I'm negative about the price of oil. I'm bearish, but I have to admit the situation looks positive. All that movement was denied. As you can see, it was even confirmed here. Horizontal resistance breakout. It was confirmed as a support and an upswing. I have to be honest that it looks all right. I'm sorry. Okay. Now let's look S&P 500 and DAX. S&P 500, what we're having is a boring sideways trend. So for the last, since 28th of March, the price didn't change much. Some may say that this is a false breakout, but it's not, because the price is not going lower. So we're having a sideways trend close to the upper line of the wedge formation, which gives more chances for a bullish breakout, right? That's a trend continuation pattern, and trend is positive, so we should, I think, respect that, even if you don't believe in gains on stocks, and I do not, but I have to be fair with myself and with charts. DAX is also having a sideways trend. What we are having here is a head and shoulder formation, a neckline which was broken, tested twice, and price went lower, but it's nothing significant. As you can see, the price is advancing higher. Here I labeled gaps. Almost every gap was closed. Not very. It didn't take much to close those gaps. It can be a potential tool for a trader. I highlighted that for today's webinar. We're having a price action webinar where gaps are very important in terms of trading, and trading with gaps is an important price action technique. But let's put price action on the side. Horizontal support, as long as we stay above this support, the sentiment is positive. As long as we stay above the support and this trend line or the lower line of the channel up formation, the sentiment is positive, so traders should not look for selling opportunities, because most probably it won't happen. Let's go back to the forex market again. Euro dollar breaches the midterm resistance. According to scenario, we should see a bounce here, but after some time we should come back to the long-term downtrend. Australian dollar to American dollar, as we are talking, that downswing did not look so promising. The price is advancing higher. Australian dollar to New Zealand dollar, I like what I see here, because we do have a long position on our live trading account. Yes, we do have. Hopefully results will come back soon. Our stop loss order is very close to the position. We're looking for a good risk to reward ratio trade. American dollar to Swiss franc, not very. After a breakout, that will be a good long position here. Okay guys, thanks very much for watching daily analytical report. If you want some more information about the markets, follow us on our Twitter account, also the tweets from other analysts from all over the world, so you don't have to stick with us. You can follow our Brazilian analysts from Indonesia, etc., etc. You shouldn't have any problems with understanding chart. The chart is chart. Also, we have a translator, so no problem with that. And our website, alpari.news. Now we'll have a webinar about price action, so stay in touch. Thanks very much and goodbye.